the next 3 chapters, chapters 8, 9, and 10. I shouldn't say. I'm sorry. I'm thinking ahead, and you can't read my mind. They're not quite as heavy as the last 2 chapters of that. Okay. So this chapter 8, we've only got 4 learning objectives, and I'm actually hoping we can get through this. We can bang this out today. This chapter is how to report income from rental property and from flow-through entities. Okay. Couple of concepts, a couple of calculations that we're going to cover in this, but they're not too complex. There's one where we have to determine whether or not a property is considered a rental or not, and I've got a flow chart for you to look at to kind of help with that. So not terribly taxing. That's a little joke there. Next chapter, we're going to talk about tax credits, and there are a bunch of tax credits that we're going to talk about. But again, I think it's not quite as heavy as the chapter 6 and chapter 7. They're a little bit more, many of them are a little bit more relatable than some of the stuff that we've been covering the last couple of chapters. And then chapter 10, because all of you, I think except for Kathy, have completed payroll accounting. But Kathy, you're in payroll accounting now, so it's gonna be fresh in your mind. We go over payroll accounting. So you've all had that stuff. It's gonna be mostly kind of a review for you, okay? So just to kind of give you a little heads up that you might get a little bit of a breather with regard to intensity for the next 3 chapters. The last 2 chapters we're gonna talk about partnerships and corporations, so it's a little bit, I wouldn't say more complex, but it's just kind of, it's stuff that's different than what we've been covering, and probably different from what you've experienced. So those 2 chapters may be a bit much, but the good part about those is you don't have any Tax Act assignments, you don't have any exam for either one of those, you don't have any tax return problems for either one of those. But after we get through the next 2 chapters, you will have the information that you need to start working on those comprehensive problems. Everything in those comprehensive problems we will have covered, so you can get started on those. I think they open up early November, so you've got like about 5 weeks to work on them. So if you pace it out, they're not going to be too overwhelming. If you wait until the last minute on them, then they're going to be overwhelming. But if you can do them piece by piece, they really won't be too bad. So thank you for your understanding about Tuesday. You don't need the whole story, but my dog is, so I have 2 golden retrievers, and I don't know if you know anything about golden retrievers. They will eat anything, pretty much. So he got into something, and his face was swollen, and his eye was droopy, and we went to the vet twice. On Monday, we ended up going to the emergency room vet up at VetMed, which is nice up in Ames to have that on Monday night, but they were like, you need to watch him the next day. So anyway, thank you for your understanding of that. All right, okay, so this particular chapter, again, rental income and income from pass-through entities, we put those 2 together because the income kind of shows up on the same form, which is the Schedule E that we're gonna, so we're introducing a new form in this chapter called the Schedule E. So we looked at the Schedule A, well, we looked at, the 1040, obviously, we're still working with that. We got the Schedule A, our itemized deductions, Schedule B, which is our interest and dividends if we have to use that to meet those requirements, Schedule C, sole proprietorship. Last chapter was Schedule D. You see we're going through the alphabet here. Schedule D are gains and losses. And now we're moving on to Schedule E. Schedule E is where we report this, and it's called passive income. So it's income that essentially it's like, you have a sort of like with dividends and interest where you kind of put your money to work and you don't work all that much on it, but your money is earning you money. So rental incomes are usually considered to be passive activities where unless you are engaged in, if you're a real estate professional, then that would be one exception where then rental income, if it's considered to be an active activity, it's gonna go actually on the Schedule C, because then it's gonna be subject to self-employment tax and all of that good stuff. When it's on Schedule E though, it's not subject to self-employment tax, because self-employment tax and Social Security and Medicare tax, all that stuff is only applied to income that's earned, income that's actively earned, I should say. So where you've put some sort of work toward earning that, you've exchanged your time or your talent or something in exchange for that money. In this case, you're just investing your money and it's making money for you. So that's why we're using this. That's why these two types of income are together, because they're all considered passive income. Okay, and that's why it's reported on the same Schedule E. Rental income is reported on the front page of the Schedule E. Passive income from flow-through entities, and I will define what that is reported on the second page of the Schedule E. And we're going to talk about how income and expenses are recognized and reported. We're going to start out talking about rental property, spend most of our time talking about rental property. And then we talk a little bit about royalty income. This is a really short section, but kind of define what royalty income is. That's also reported on a Schedule E, and then we'll also talk about flow-through entities. These are mainly like partnerships, S corporations. They throw LLCs in here, but really LLCs are not a tax entity. They are they're a state entity, and an LLC could be a sole proprietorship, it could be a partnership, it could be an S corporation. So it depending on how that LLC chooses to be taxed, it could be any of those things, but they throw it in here. And then trusts and estates are also part of passive entities. So we're not going to go into detail about partnerships and S corporations as far as what the accounting is, the tax accounting is for them right now in this chapter, but we will be talking more about that in the last two chapters, how they report their income. What we're talking about here are the individuals who are owners of these companies, these types of entities, and how that income then flows through to their own personal tax returns. Okay, so that's kind of a summary of what this chapter is about.